Hello and welcome back. We're just going back over the owner financing here. This is a continuation and going over the structure, how you structure an owner finance deals. This is if you want to get into note creation. If you're an investor and you want to sell some with owner financing because you don't want to deal with the headaches of a rental, or you just want to have income payable over a period of time instead of all one lump sum. Owner financing is a great way to do it. So the first thing you need to have the applicant do, once you find a buyer for the property, you need to have them fill out a 1003, a mortgage application. And then what you're going to need is a copy of the driver's license for all the borrowers. And need a copy of 2 months bank statements, whatever bank statements they have, checking, savings, both, as much as you can get. If they have retirement plans, whatever they have in savings, checking, so on and so forth, you want to get. You're going to get their 2 most recent pay stubs as well. And then what I like to do personally, I used to do underwriting back in the day. So I like to do the debt to income ratio and come up with it. And basically what you're looking at is you want to keep the debt 40 to 45% or below of all their gross income each month, just to make sure they can afford a mortgage. I personally like 40% or below. Once you're below 40%, you're in safer territory. But part of it is looking at their credit and seeing what they have out there, what their monthly debt obligations are. In large part, most of these people don't have too much. Sometimes just a small credit card or a car loan. And then you're going to want to get the employer's information and verify employment. And then most importantly, if you get into doing enough of these deals that are owner occupied, you're going to want to find an RLMO, a residential loan mortgage officer, to underwrite the deal for you. And these guys charge anywhere from $500 to say $1,000 per deal to do the underwriting for you. And then you're official and good to go. I want to go over a sample deal. Actually, I have several sample deals to go over here. The first sample deal was of a $29,000 sales price. We got $2,000 down, so it wasn't a huge amount down. Borrower had okay credit, and since they didn't put a whole lot down, I had a pretty high mortgage rate here at 12%. Did lower down payment, and the credit just being okay. 5-year term, principal and interest payment of $600.60. So if you look at this payable over the 5-year period of 60 payments, you would have received $36,036 plus the $2,000 down for a total of $38,036. And our all-in purchase on this property, closing costs and everything are basically just under $12,000, $11,996.93. So the net profit over the 5-year period would be $24,039.07 for a total of a 200% return on investment. But more importantly, I love this one, an annual return of 60%, because this $7,207.70 is the monthly payments times 12 divided by the initial investment into the property. So you have a great annual return on investment. Tell me who wouldn't want that return and who wouldn't want this return. Deal number 2, a little higher value house here, $69,900 sales price, got $7,000 down, $62,900 mortgage payable over 15 years at 5.5%. The borrower had decent credit and very good income. He was self-employed, which has made it harder for him to get a mortgage, but he did have decent income, had plenty of money in the bank. So the principal and interest payments of this are $682.63 per month. Plus we're escrowing taxes and insurance of $162.03 a month. And I'm charging a loan servicing fee of $30 a month, which will be payable to me initially. And then once I have it serviced with a third party servicer, they'll receive that $30 per month. But I want the buyer to pay for that. I don't want to be paying for that. So if you look at the principal and interest payment over 130 total pay, or 100, and actually that should be 180 total payments. That's a miscue there. It's $122,873.40 in total. See what happens when you spread this out over time. You have a great return on this. If you decided you wanted to keep this and service it for the whole entire 180 payments, you would actually make $5,400 on servicing as well. Total into this property for $33,500, which was purchased plus the rehab cost. So the ROI over the 15 years would be 367%, and the annual return is 24.45%, which is the 8191, which is 682.63 monthly. I did not include the servicing fee in that. Divided by 33.5, so you get a basically 24.5% return, which is a tremendous return. Sample deal number 3, and these are going to kind of keep getting better. This one being potentially the best or one of the best of all the samples. So we purchased this property, and this was in New York, for $16,218.44 all in closing cost. We sold it for $35,000, got $20,000 down, and after doing a double close, we received $1,723.32 profit up front. Right, this is upfront money we got after their $20,000 down. We have no money into the deal right now, so technically everything is infinite profits. But in order to make this a little more simple, I use what I'll always use the return based off this. But it is truly an infinite number. So we created a $15,000 mortgage on this. We sold it for $35,000 at 8%, and they wanted short-term payoff, so they're paying it over 24 months. Their monthly principal and interest payment is $678.41. So over the 2-year period, we will receive $16,281.84. Total net profit on the deal, $18,005.16. 111% return on investment, annualized return of 55.5%. Again, you're seeing just how powerful these returns are in the seller financing. Sample deal number 4. This was a property in Western Pennsylvania I bought, $10,569.30 all in. Buyer put down $11,200, so we're profitable from the start, just a little under $1,000 here, $884.74. Sold it for $30,000, so we held a mortgage of $20,000 payable over 5 years at a rate of 10%. The monthly payment is $424.94. So the total paid over a 60-month period with $424.94 would be $25,496.40 plus the initial $884.74 profit. So your total net profit over a 5-year period, $26,381.14. 250% return on investment, even though, like I said, this is truly an infinite return on investment, but I'm always going to base off the initial purchase price. An annual return of 48.2%, which is $5,099.28 per year, divided by the $10,569.30 of the initial investment. So in total, I just let you know where I am with this mortgage. I've received 46 payments since the inception of this mortgage. I keep it. I keep all the infinite return mortgages because why wouldn't I? Why would I want to sell it when all the profits is pure profits? Sample deal number 5 here. So this is one I purchased from the county. This was a tax deed sale that I bought from the county, paid back taxes, plus put a little bit in repairs. So I was $5,657.81 into the property. Sold for $25,000, got $5,000 down from the buyer. So I was out of pocket $657.81 from jump, so barely out of pocket anything. Created a $20,000 mortgage at 9%, payable over 60 months with a principal and interest payment of $415.17 per month. Plus we have tax and insurance escrow added on there. So she pays around $520 and change per month. The principal and interest over the 60 months would be $24,910.20. So the return on investment would be 529%. What I did to come up with this number is the $25,000 or $24,910 plus the $5,000 she put down, divided by the initial of $5,657.81. The annual return on investment on this one, again, is 88%. So these returns are unbelievably high. They're tremendous. And yeah, large part because the dollar figure is low. So if you run into these inexpensive properties and want to that quickly, easily, to end buyers. Occasionally, some of these I sell to investors as well that keep them as cash flow rentals. But the most profitable ones are almost always going to be selling to just homeowners, people looking to live in there. You just can't beat these returns. Most of them I do on installment contracts, so not even recording the deed. So if something goes bad, if they go bad, I just do this all over again with somebody else. Maybe I have to clean it up a little bit, but heck, the return is infinite on this property already. So there's no cost for me going in. So if I have to put paint, carpet, clean it up a little bit, maybe repair some damaged walls, so on and so forth, it's all going to be pure profit again on the next person, hopefully I'll get a nice chunk of change down again and do the same thing. Or maybe I decide to turn it into a rental property, or just decide to turn around, sell it as is. I'm tired of the property. I want to cash out. So you have so many different exit strategies. It's unbelievable. But this is one of the most powerful methods you'll find in investing out there. And I highly recommend to anybody to get out there, whether you're new, whether you're an experienced investor, get into owner financing. It is just such a valuable tool to have in your tool belt. And you have such tremendous returns. I mean, if you had these in your stock portfolios, wouldn't your jaw drop? Right? And you can create a portfolio of these properties, which I have, where I'm continually receiving these returns on it year over year over year. And that's on top of the rentals I have, on top of the wholesale deals that we have. So just a powerful resource, something that I recommend anybody out there get into. And owner financing, again, just such a great resource out there. Hope you enjoyed this episode. If you have any questions, feel free to reach out to me.